Hello, everyone. Welcome to a weekly update on the financial market. My name is Tian. I'm a finance professor at Colorado State University. In the past few years, I have started a regular market update session in my classes, and I was encouraged by many of our students to provide a market update on YouTube channel. Since the big market crash in March 2020 with four circuit breakers, I started this channel to provide some update on the market from what I have read and thought about. So here's the channel. This is the first week of the spring semester 2021. I want to use the opportunity to welcome all of my new students and new friends, and welcome back my previous students and our alumni. Finance is a very important topic as everyone will need some finance and investment. And regardless of your career path, we are all part of a very big financial network. I should know that the modern financial market is very complicated and keeps evolving quickly. I will be the first to admit that. Even I have taught finance for 10 years, I don't know everything about the financial market, and I still need to learn every day about the market. I just want to share my view in this channel, not investment advices, and this is also a learning process for me. Last week, on Friday, the Dow falls more than 150 points to close out a losing week. With just a few days to the inauguration, here's the current plan from the incoming administration, including a federal Musk mandate on government property and for interstate travel, expanding neighborhood access by activating local pharmacies, reimbursing states for deploying the National Guard to support vaccination, and more importantly, a near $2 trillion stimulus plan. In 2020, we all together witnessed the shortest bear market of only 33 days, the sharpest V-shaped recovery of the market, a zero, near zero, or even negative interest rate environment, the boom of the stock market, the IPO, and the SPAC firms, the blank check firms. And according to a lot of metrics, the market is considered to be overvalued, but possibly be justifiable due to the low interest rate environment. What's next? Where the market is going? There are a lot of diverging view in the market right now floating around. Here is the heat map of the SP 500 different sectors in the past year. We can see that the market goes up a lot, and that is led by the tech firm, including the fund firms of Facebook, Amazon, Apple, Netflix, and Google, and also a huge increase of Tesla. In comparison, here is the heat map of the market of 2021 so far. We can see that with the exception of Tesla, most of the tech firms are losing ground so far this year. According to a Bloomberg article, there is a big diverging view from option traders. This is based on put-call ratio that measures how many option traders buy a put option, which is bearish, versus buy a call option, which is bullish. The diverging blue curve of the put-call ratio for the market index and the white curve of put-call ratio for the equity shows that option traders are bullish on single stocks, but very skeptical on the overall market indices. This diverging view is concerning. Here's another diverging view that is coming from the equity market versus the bond market. The real yield on TIPS, the Treasury inflation protected securities, usually reflect the risk-free real yields that investors expect to receive in the future, and has a similar pattern to the market risk premium, which is proxied by the real SP 500's earning yield. Ever since the market recovery in 2020, these two measures have been diverged, with the inflation subdued and together the market value melt up. Historically, such divergence cannot last long. Either the bond market is proven right or the equity market is going to be proven right. Warren Buffett famously said, be fearful when others are greedy, and be greedy when others are fearful. So here is the Fear and Greed Index by CNN Business. This is an aggregate index incorporating stock price strength, stock price breadth, market momentum, market volatility, put call ratio, and spread analysis on junk bonds versus investment grade bond, and the bond and stock market yield differences. According to the Fear and Greed Index, the market is still in a greedy mood, but it has largely pulled back from a week ago, a month ago, and a year ago, showing serious doubt and suspect from different investors. The party reminds us of what happened in 1999 when SP 500 soared almost 60% from their low. In that year, if you still remember, the market sees the default of the Russian government and the LTCM failure, which is later on bailed out by the government. The low of that year happened on August 31st, 1998. And since the low, all the way into March 2000, when the internet bubble burst, the SPY goes up by about 60%. Now we are seeing that in 2020, this recovery is even more sharper than the 1999 one. If we look at NASDAQ, the party looks even more similar. Follow what we have seen so far, there's going to be an even bigger melt up in NASDAQ, which happened in 1999 through March 2000. Eventually, the NASDAQ goes up by about 230% from the low all the way to high until the bubble burst, which is part of the reason a lot of the investors think the market is overvalued, but the party probably still have a long way to go and let's dance before the music stops. Lastly, I want to share one of the best quotes from Warren Buffett. The best investment you can make is an investment in yourself. The more you learn, the more you will earn. Investing on your own is the solution to everything. And the ability to do what you want feels more than just happy. It feels like joy and freedom. So keep learning. If you think education is expensive, try ignorance. That's all for today. If you like the content, please subscribe to the channel. Stay tuned. See you next time.